Hey guys, happy Friday.
Happy
Christy,
Friday.
KP, how y'all?
Hey,
So
hey.
we are back for Friday's Crispin commentary show, The Last Word, with Christy, KP, and BV, or it should be Souk, KP, and BV. And I think, Christy, this will be cool. KP and I are coming off of the Housing Wire IMB. You're coming off of the Acuma conference. So maybe we start with you just giving us a sense for how the credit union industry is feeling about the mortgage business coming out of Acuma.
It was a great conference. I think so. Peter Benjamin did a fantastic job of pulling together a great set of speakers. I got to hang out with Rob Chrisman and Logan Monashami, just to Bill Bodner, like just some great folks that the industry really looks up to. And hearing what the sentiment was for many folks, one, they're glad that we got a little bit of relief from the Fed rate cut. And not that the Fed rate cut actually did anything for interest rates other than make them go up, but the sentiment for consumers, right, is, okay, well, rates are coming down. They were at least using that as a directional to say, okay, well, I should probably get off the fence now. And so you're starting to see the consumers really get back into the space. And you're seeing that in the data, right? You're seeing the application volume tick up. You're seeing housing go under contract tick up. You're not seeing prices go down. The data that I know that Mike shared from Altos at the IMB Summit and that Logan shared at Acuma, just really talking about where we're seeing price cuts and where we're seeing home values, right, kind of stabilize. We're not going to see that big dip that people are really worried about. And that's good for consumer sentiment. It's good for them to want to come out and purchase a home. They're feeling like rates are stable. And that was really widespread. There is still the concern among a lot of lenders that, we finally get to the point where we are making money, or most lenders are making money, not all, but most. And as we go into the slow season, is that going to deteriorate? Are we going to continue to see losses? What's going to happen with mergers and acquisitions? Are we going to continue to see some of those types of announcements? And what impact is that going to have on the industry on a go-forward basis? There was a lot of buzz around tech and cool things that are happening, but really some good, deep, thoughtful questions on what should I be implementing and how is it going to positively or negatively impact my business and my teams? So is the right time to invest, and what should we be investing in? That's the 2-minute version.
Love it. KP, I'll let you start with you can start us off. You and I can go back and forth on the Housing Wire IMB Summit.
Yeah, it's just cool that we have another event, sponsored by our industry's premier, I guess, on the ground, boots on the ground, that's a trade rag like that, right? Obviously we have the Crispin commentary who's been there forever and we're part of, but Housing Wire has made quite a push, right? And so got to give them some credit. It's in our hometown. And my hometown, and it's right there in the George W. Bush Presidential Library on the SMU campus. My dad went to school there and worked close by at Texas Instruments. My sister's right down the street. I got to see my sister and my mom. So for me, I thought it was a pretty cool way to get back to Dallas. Although I do miss my Vegas shows. Souk, I'm a little jealous. No, you're over it.
No.
Yeah, well, I'm sure there'll be another one coming soon. But no, I thought the vibe was good. I thought they assembled a really good cast as far as this trade show goes, and it was an honor to be up there with Laura Brandeo and Candace McNaught on the session right before lunch started. I love that spot. It's a good spot to be on. Oh, yeah. And man, just Sean Panosian, the #1 originator in America. You've got. I could go down the list, but you probably feel as good about it as I did. Good vibe, in and out, not too long, easy to get to, very well coordinated, beautiful place. Boom, boom, boom. We're out.
Yeah, this is one of those conferences going into it. I've only done this in one other conference, probably in the last 10 years, but I did not pre-schedule any meetings. Because I wanted to be in front, in that room for as many of the sessions as I could. and as it turns out, I still ended up, having 15 meetings throughout the 2.5 days I was there. But I looked at it from two different lenses, right? Of the three of us, I sit on the vendor tech side of the world, where I do outrageous cold calls to people like Christy right before we're about to go live on shows.
Okay, yeah, KP, you missed that conversation.
You missed that part.
Hey, I was even 3 minutes early.
Yeah, I know. I'm proud of you. But so from my seat as a vendor, which I hate that word, but I'm a tech partner, I guess. It was an awesome conference. That, like, the people that were in the room were like people that I was either wanting to talk to or have been talking to, and so I advanced a lot of conversations that way, and talking with other folks that are in my seat, if you will. They felt it was really powerful from that perspective. But then I always put myself in the shoes of who I think is the target attendee, which both of you, I think, would fall into that. Christy, even though you're not an IMB, I think the format, the commentary and the content is really relevant to how you look at.
She's a legacy IMB. She was an OG IMB.
But
Once
I'm a
an IMB,
quasi,
always.
I call us a quasi IMB, right?
Yeah.
I think that it's interesting when you think about some financial institutions, and I'm just going to interrupt you here and be super.
Yeah, no, please.
But you think about the way credit unions operate. They operate a lot like IMBs, at least where I am and the ones that I'm familiar with. That we are that independent-minded entrepreneurial group that happens to have the support of a balance sheet, right? A little different than some of your larger financial institutions where mortgage is a super small piece of what they do. It's a huge piece of what we do. So I treat us more like an IMB.
Yeah, I agree. It's a members first, mantra at, your credit union and a lot of credit unions. It is a little bit different. Of course, you just have to have a board that has the appetite to also want to play in that space and hire someone like you and your team to come in and actually put attention on that. And so I agree. They're not all banks and credit unions are alike, though. But when you get into the banking world, you get bigger, you get more regulation, they make more money in other places, and in mortgages, sometimes an afterthought, right? So anyway.
So one thing I wanted to just pull out of the conference that I just think it's good to update and remind people on this issue. We've talked about it probably in the last 5 or 6 shows. It's the trigger lead legislation. Not that we're going to hammer on it deep, but Bob Brooksmith gave an update, a really good update, kind of in real live time on Tuesday, and he shared with the audience that there's three carve-outs as it relates to this legislation, right? And I don't think everybody knows that. I talk to a lot of loan officers every day, and most are even surprised there's anything going on with trigger legislation, even though we've been talking about it. And so I just wanted to share with the audience here and just make sure people really understand that trigger leads are not, quote unquote, going away. Maybe the trigger leads as we know them and are annoyed by them, and our consumers are really harassed by them, those are going away. But the concept of monitoring customers and consumers for specific credit-related events doesn't go away. And so in the legislation that's very likely going to get passed, there's 3 carve-outs. There's a carve-out for the current originator, so that entity that originated the loan has a right to continue to monitor their customer. There's a carve-out for the current mortgage servicer that's now servicing that loan. Could be the same as that originator, but in most cases it's probably not. That servicer has a right to monitor that consumer. And then the third, which I think is really important for people to understand, is that a bank or any depository, a bank or credit union that has a traditional banking relationship with a customer, checking, savings, et cetera, also has a right to monitor that customer through that traditional trigger mechanism. And so the trigger lead part isn't fully going away. There's these carve outs. I think it's important for everyone to recognize. I don't think that any of the three entities that I just described are part of the problem today. They're not part of the problem at all.
No, the problem is the 180 phone calls, right?
Yeah.
People aren't complaining that their servicer is calling them or trying to connect with them. What I will say is that of those carve outs, that if you aren't already building a relationship with that member, that consumer, that borrower, you've already failed. The reason you should be monitoring the trigger leads is for other reasons and for data analytics. But if you make a phone call and that's the first time or the only time you've talked to that person, why would they even give you the opportunity to do business? Like,
Right.
Build the relationship, stay in touch. I mean, do things like what you do with FinLocker, with being in front of that consumer and providing value on a regular basis. And this is just a great reminder. This is what our job is.
I think the terrible experience that consumers have will be greatly improved. Just triggers. I'm seeing, and hearing stories of, 30, 40, 50 phone calls within minutes, from all these different places. And so it's almost like, being in, Pennsylvania or Wisconsin or Michigan or Minnesota during an election, you just bombarded with ads you just don't really care about. So, literally, I don't even watch TV. I mean, occasionally a Cowboys and a Longhorns game. That's it. Not this weekend though. Just so I'm going to be a little baby here for a second. So, the Longhorns have a bye. So my wife over here is getting
ACL.
a
ACL, come on.
Oh, well, there you go. Well, so my wife is getting a mommy's retreat, and because I take so many work trips in the family calendar, it's scheduled as the mom's work trip. So they're going down to Temecula to go work on their game plan on how to consume wine, how to source wine, how to drink wine. Anyway, so I've already punished my wife 2 weekends this year not being at home for conferences, and now so I get to have all 4 kids and so I decided I'm going to take the kids to flag deck this morning at school. They do the Pledge of Allegiance, they have the band, they give out awards. It was like the monthly one where we give all the monthly awards. It was pretty fun. Anyway, she just rushed out the door. She was smirking as I was saying that. I think the only reason she ever smiles for anything that I ever say is when it's me getting punished in some sort of way. So,
So I'm gonna keep you from getting canceled. You're not getting punished. You're doing part of your parental duty.
No, I know. See, this is you as an empty nester. You're like, man, I wish I had those days back. You're like, just maybe one weekend. Yeah, no, I'm not complaining. I'm having fun with it. I actually enjoy it. Like, I love soccer. I love baseball. I played both. My kids are in both. We got all of them at flag football tonight, Friday Night Lights, and all 4 games. All 4 have a soccer game this weekend, and there's another soccer game on Sunday, and then daisies and birthday parties. It's so much fun. Anyway, so yeah, I don't have time to watch sports, and I sure as I ain't watching anything about politics.
Yeah.
How about that for a segue into politics?
It's a perfect segue. So I didn't watch any of the vice presidential debate. I was out and about, at the conference, but just curious, based on the headlines, the news bites that you guys may have seen or heard about it, any references specifically to housing that folks should be kind of paying attention to from Tuesday's debate?
So I didn't watch the debate either, but based on what you see on social media, there's a lot of debate about who won the thing. Look, I think the vice presidential debate is not going to decide the election. But what you see in a lot of the commentary is that housing is playing a role. People are concerned about housing and housing affordability. This is a continuous topic that we get to talk about on this, not only in our day-to-day jobs, but in these conversations that we have. And what are the right solutions? If there was a silver bullet, it would have already happened. And we're going to have to do a lot of work. I personally think most of the work is going to be at the local level versus the national level. Markets are too unique. Real estate is location, 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 and that hasn't changed. I happen to be sitting in Arizona right now, and what works in Arizona is not going to be the same thing that works in Texas or works in California or even in Georgia or wherever. And so you've got to get involved at the local level. And this is an opportunity to talk about the organizations that you're involved with. I know, Brian, you're really involved in the Michigan Mortgage Lenders, and Kevin, you're with the California group. And I know that you do some at the local, even the more local level than just the state in the areas you guys live in. And that's what we need. Originators are going to have to take the lead, because their senior executives aren't always in the same markets. And if you want your business to continue to thrive, housing is an important issue, and you should be advocating at the local levels, that state and city level. Yeah,
I agree. I mean, honestly, like when it comes to the presidential debate, I'm just here for the memes. So, they looked pretty, it looked like it was kind of a funny event, anyway, but you made me think of something, a little more serious, we just had a huge hurricane with Helene, and it's unbelievable. One of our account executives, in, the Cary, Charlotte area, I texted her the other day to make sure she's okay. She said, it wasn't too bad. But her husband is I believe part of the National Guard, and he got called up to go help. And like one of his buddies, was already out there the day before, and he found 6 bodies. I mean, they're literally like just uncovering people in rubble, and so it's pretty bad. And so when I think about national housing policy, I mean, I don't know if I'm realist or if I'm jaded or if I've become a crusty old veteran when it comes to politics, but I don't believe a word they say. It really doesn't matter. There are some executive orders that could make sense, and so it's nice to understand maybe kind of a feel for what you think a president would do. But I've already seen both of them in action for 4 years, so I pretty much know what they're going to do. I know what's at their roots. I know how they think. I know their ideology. I know how they look at the world, and so the vice president debate doesn't mean anything to me. If they could make some kind of pivot to fund these hurricane victims, I mean, at least show support, show up on the ground and tell them that help's on the way. And I know it's not, it's not an equivalence here. And I know it's kind of a funny meme, but it is worth mentioning. I mean, when you send $100 billion to Ukraine, and again, I think we should be there, assisting on that front, but also assist at the home front, right? And so it's a funny meme to go, we sent $1 billion to Yemen, and $1 billion to Uganda, and hit $100 billion to you. Like it's a juxtaposition that makes you think just how messed up our government is when they say, well, FEMA's out of money. So because we're at the end of this saying, we're just now passing budgets and FEMA can only get $750 out per victim, they're out of money. But we somehow find a way to send this other money to other countries. So find a way here. This is a disaster. This is our war on the home front against, whatever you call it, climate control or just natural storms or whatever. And if they want to talk about policies, they should nationalize insurance. And I know it's way easier said than done because every state controls homeowners insurance and the funds. But, we have a national flood insurance fund. Which is kind of a nightmare because they have to fund it all the time, and you get little periods where you can't write policies. But if they want to talk, something that's prescient, at the moment, they should talk about how to climate risk. Like I'm not Greta, Thunberg over here. Like I'm not some extremist, but climate risk is a real deal. We have collateral on the ground at all of our companies, and look at every storm that comes through here. It wipes out billions of dollars in real estate. And it just makes reduces the supply, displaces people, increases insurance, and it's just a problem. And so, it's something that maybe some national attention by the federal government should be paid to.
I saw a statistic this morning, and I'm not going to even try to remember it because I can't, but it was an astronomical high percentage of the homes in the geography where the hurricane came through do not have flood insurance.
Okay, but Brian, let's think about it. Why, if you're on the side of a mountain?
Yeah, exactly.
I mean, it's like Noah's Ark in
Yep.
this case, and not that there isn't an opportunity for people to have different types of insurance, but you don't insure and you don't prepare for this type of a loss, right? And it wasn't
Right.
even really the hurricane in a lot of these areas. It was the torrential rains that got dumped. And I think I saw a number that said it was like, like Niagara Falls going through there every second for days and days. It was like 40 trillion gallons or something like that. It was devastating. And I, by the way, flew into the hurricane. I flew into our Raleigh office and then went to Savannah over the weekend. And those areas were less impacted than obviously the areas in Western North Carolina and South Carolina. My daughter's school, she said literally the entire parking lot was covered in trees and all these cars were just demolished. Can you imagine being a freshman in college and your car being, 6 weeks into school, getting pummeled and then having nowhere to go and no food? I mean, the school did the best they could. They were feeding folks, but you're getting chips and sandwiches out of a dining hall because they don't have, they had no electricity, they had no whatever. And when we think about our role in helping people have home ownership, it goes beyond. We, as an originator, I know I said, hey, I'm here for you after the closing. So what does that look like? What does it look like for us to be on the ground? I've seen so many realtors that are collecting supplies that are in that area and bringing them out to folks who have no running water, no electricity, and aren't expected to get it for, maybe weeks, given the power lines that are down and the destruction to some of the other equipment. So what is our role? Because to me, we can't rely on the federal government for everything. We've really got to do our piece locally on the ground, because it's going to take a lot to rebuild those places. Folks aren't going to have a place to live. They're not going to be able to go to work. So they may not have an income. So what does it look like for us to think about how do we act compassionately, with also understanding what our obligation is to the bondholder that has made these loans? And so I think there's a lot to discuss here.
Yeah, a lot of times you see forbearance when they're on the mortgage side, right? Servicers will do that, but the immediacy of creating more shelter for them and feeding them and getting water in there, that part is paramount right now.
And maybe their mortgage goes into forbearance, but what about their car loan and their car? They watched their car float away down this new river that didn't exist, and now does. And are they going to be able to get their house rebuilt? And how long does it take them to get back to normalcy? What can and what should be?
It's years. I mean, literally years. I mean, I mentioned this on one of our past shows. I was directly hit by Katrina and Wilma in Fort Lauderdale, and there were blue tarps on roofs that had not been repaired for over 2 years. Of me flying in and out of Fort Lauderdale, I see them just on the ground, and that's just roof damage. I mean, how long it takes to build a house anywhere nowadays, not to mention an entire neighborhood of houses all on a mountainside. It's going to be a while.
I do want to shout out a couple leaders in the industry and companies that have put their money.
I saw Steve Jacobson step up out there. I thought it was pretty cool.
Jake did a tremendous job.
Awesome job, Steve and team at
Fairway, CEO at Fairway, for those who don't know.
Movement Mortgage through their foundation is very active. I'm sure there's dozens of companies that are in it from our industry, to your point, Christy, that are local and engaged, but too often the news only talks about the negative stuff in our industry a lot of times, and so I think it's important to recognize when leaders of these companies step up and like I said, put their money where their mouth is. So great job, Steve and Fairway and Casey and the Movement team and all the other companies that are on the street. Casey
broke out the old Panthers jersey and his biceps look like they still kind of fill it out. He rallied the troops there, and they put some love and effort into this storm and their victims. So great group over there as well.
But also
shout to my boy Jason Stenger.
There you go.
Love Jason. It brings up the question: what risk do we have as in our industry with our portfolios, should we be looking at climate data? Should we be recommending things to our
Yes.
customers to protect them? And where do you go and get that data? And how do you make sure that you're utilizing it adequately?
I'll tell you right now, I mean, I know we're not like plugging a bunch of companies, but CoreLogic has fantastic data regarding climate change. They put it on a heat map. They have an estimate of how the impact of weather will be over the coming years. It's really, really good data. I mean, if you're a servicer, I think it's really hard to beat their data.
If you guys know Amanda Johnson, she just went to First Street, right? She correspondent rep, and she went over there because she believes that climate data is something we should be looking at. And so she's kind of switched her career to serve the mortgage industry and getting and understanding that.
I have a place in Fort Lauderdale. Like, my insurance went up like several $1,000s this year, and it's just an investment property. I'm like, if I didn't have this stupid lien on it for, whatever I owe on it since when I bought it, God knows when, I wouldn't even insure it. I'd be like, oh, whatever. I'll just pay for it over the years. I mean, seriously, like how much did it cost me to replace the flooding? 20, 30 grand, 50 grand's worth of work. Here you go. Here's cash, 50 grand, fix all my drywall and fix the floors. I mean, that's like, that's like 5, 6, 7 years worth of insurance policies at this rate. Before you know it, there'll be $10,000 a year or more. I mean, it's crazy to insure these places. Anyway, don't get me started. Or get me started.
I think we hit on it a little bit last week, but there's the cost of insurance now is squarely impacting affordability, right? It's not. That used to not be something you talked about as being a significant hurdle
and taxes
for a home buyer, right?
Taxes too. I mean, that taxes and insurance are shockingly high.
I'm telling you, we're looking a lot like Europe. So, it just erodes the middle class. It makes it harder to get into a home. I mean, we have an $802,000 conforming limit now that we've put out. We were like the third lender in America to put it out, and $802,000, and that's after your down payment. Now, obviously, we're in markets where we're trying to serve veterans who are on active military pay, and that's a different price point, or maybe we're in a smaller area in the country, but those premiums for insurance don't make up for the losses of California wildfires, or hurricanes that we just saw on coastal cities, in Texas and Florida and Mississippi and Alabama. And so these insurance books are out of whack, and it's not going to get easier. And home prices are going to go up. That's just what they do when rates come down. There's no silver bullet on housing supply. And that's why I think the Fed has given up, right? So they just, we didn't talk at all today about anything. I think we should talk a little bit about macro since it was a jobs report today, but,
right.
Before we get off here in a couple minutes, but the Fed has given up on the housing component in inflation. There's just nothing else they can do. Literally every other component of core PCE is like below 2%. And so they just can't build more houses. They're out. They gave up. And that's why I think we're getting closer to Europe, where it's just more and more unaffordable to get houses. We got to convince people to move away from the urban centers and, get your starter home. And by the way, the jobs report, the headline number was stronger, mostly in leisure and hospitality. And so
too many people with second jobs too. Too many people with second jobs being double counted when you look at that number.
Yeah. I mean, you got health and education, government. You got government jobs, government. And then, of course, you have leisure and hospitality, which honestly, the boomer wealth in America, it's half the country's net worth. They got money. They save. They're going out for dinner. They don't have any debt. So that's kind of our economy right now. Manufacturing and, job losses again on this jobs report, plus the ISM manufacturing number, 23 months out of the last 2 years with contractionary manufacturing index data. And so we took a 50 basis point rate cut off the table today. It should only be 25, but the rates are still highly restrictive, and it's very restrictive on the poor. And the jobs that are being created are much, much less overall than a year ago. There's a lot more part-time gigs, second gigs, like you said, Souk. And so it'll be interesting to see, do we have like an up quarter, a down quarter, an up quarter? Like, are we kind of going up and down in our GDP reads and this soft landing? It's softish. It's not. It's soft. So, but anyway, today was a friendly jobs report, compared to last month for sure.
I've got
Thanks.
nothing to add to that.
Yeah, I mean we're at 10:30. I try to give the man a ride at 10:30, so you just take us home.
Christy, anything to close us out here?
No, I'm going to leave it to you. We got to wrap it up. We got to give folks they got to go out and bring in some new loans, because hopefully we're going to keep our profitability and we can at least continue to buy McDonald's,
There you go.
through the end of the year.
Well, that's not a given either. That the Happy Meal, or the what do they call it? The $5 Happy Meal. You don't get much anymore for that. So KP, I know we don't have you next week. You're going to be doing the Red River, whatever the thing it's called.
We used to call it the Red River Shootout, but now it's the Red River Rivalry. Anyway, so both Texas and Oklahoma, it's our first game against each other in a neutral site at the Cotton Bowl in Dallas. We'll be back at the Cotton Bowl, back in Dallas, and should be an ass kicking. Although you never know with that game. OU doesn't look too good. Now, I may pop in. Just saying. Okay, so I'm going to be on a golf course. I am off. I play traditionally once a year in this 6-man scramble. It's kind of a shit show, actually. So I may pop in just to give you guys a laugh and see how it's going down, and try not to interrupt the show.
No, we'll be waiting for your entrance next week. Christy, thanks so much for joining us here. KP, have a great weekend with kids. Looking forward to watching the Chronicles on your Instagram story.
It's all good.
See you guys.
See you guys.
Cheers.
Bye.
Bye-bye.